This is another episode of me trading smart, managing risk while learning how to trade effectively. And today, I can say that I checked all three of those boxes and I had the best session that I've had yet. And it's all because of the extensive journaling that I've been doing recently in my little paper tablet device that I have right here. Right here. So I'm telling y'all, journaling in this game is absolutely everything. ICT finally stopped live streaming this week. He had one live stream on Wednesday. And since then, I've finally had the time to just sit down and journal and organize all of my discoveries and price action and actually build an approach to the market. And now I'm actually working on following that. This week is my first week of actually following my approach slash model to the market in the New York morning session. And today, everything played out exactly as I anticipated. And it was just beautiful, 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 beautiful. And it's such a good feeling because I also corrected some mistakes that I've had to work on in terms of my psychology. For example, greed. I was able to combat my greed today at the 9:30 open. I didn't feel any anxiety. I was patient. I was calm. I was collected. I was relaxed. And I was just simply waiting for the market to give me information that suggested I have a valid condition in the marketplace to get long. Like everything was just, oh my God. Such a good feeling when you do everything right. I don't feel good about how much money I made today because I'm demo trading. It doesn't really mean anything at all. But even if I was trading with real money, I think I'd get more satisfaction from knowing that I did absolutely everything correct over how much money I made in today's session. And that is exactly what you have to be focused on. We're not focused on making money, right? We're focused on doing things the right way. Shout out Metashackle. Metashackle, if you're watching this, thanks for the intro again. So let's get into it. But before we get into it, I want to shout out my Discord community. So I built this Discord server near the end of September, and it's grown to quite a few members. We have 100 members right now, but it's really just a tight-knit community where we're literally all sharing lessons and we're all growing together. It's actually beautiful seeing traders develop in this community, and we're all growing together. We're all sharing our lessons. It's awesome, right? If we all have questions, we ask each other, we answer, we join Hangout literally every day, and we just sit in there, we talk, we chop it up, we're connecting with each other. It's awesome. So if you're interested in that, the link is in my YouTube bio. It's also in the bio on my Instagram account. But if you join, you have to engage, because if you don't engage, then I'm going to remove you from the community, because I want it to be a tight-knit community, right? I don't care about the numbers. I care about the quality of the people that are in there, and I want people engaging in there. And if you're not engaging, then you will get removed from the community. So if you're interested, feel free to join. It's free. I'm not charging anything for it. All right. Now we can get into it. Okay. So let's review the trade that I executed today, which was right here. So it was simply spotting the start of a lower time frame market maker buy model during the macro, or the transition from the sell side of the curve to the buy side of the curve during the macro. Okay. And it was taken at 9:53. This trade played out for 46.75 handles in my favor. The drawdown was only 3.25 points, and it took 3 minutes. Oh shit! It took 3 minutes to deliver to my objective. So yeah, and this is just other metrics that I'm tracking. Okay, occurred during the 9:50 10:10 macro. So top down analysis. Let's go. Okay, starting on the weekly chart. We can see that we reacted out of this weekly sell side imbalance, buy side inefficiency here, right? And we closed below it. So what does that indicate? Weakness. But look what we did on the following candle. This candle opens, it trades down into this buy side imbalance, sell side inefficiency. And it also closes above that. So we kind of have mixed signals, right? This indicates weakness, but this indicates strength. Now, if you think in terms of what is going on in just the global climate, we have the US presidential elections coming up, right? So what are they going to do before the election? They're going to prop this thing up because people think that the stock market is a measure of how the economy is doing. Stock market go up, economy good, president in office right now look good, right? So with that information, we know that they're just going to prop this thing up. So they're not going to let this thing fall before the presidential election, right? They're just going to they're going to be in there, keep propping this thing up. Okay. Now, if we grade this wick, we treat wicks as inefficiencies. If we grade that, drop quadrants on that, look at that. We respect the lower quadrant of this wick. Perfect reaction right off the lower quadrant, and that forms the low of this week's weekly candle. And if we notice how we traded back down to the weekly buy side imbalance, sell side inefficiency, The previous week's candle did the work in the lower quadrant. So if we were to revisit this, we would not want to see it trade down to the lower quadrant. We want to see it stay in the upper quadrant, and we get that reaction. Also, line that up with the lower quadrant of this weekly wick, right? That discount wick. Daily time frame. Now we can see in this weekly profile, if we think in terms of weekly power of 3, Monday, we have an initial drop down. We have that down close candle. Tuesday, we take Monday's low. We manipulate Monday's low, also trading into the upper quadrant of that weekly buy side imbalance, sell side inefficiency, and we begin to distribute higher. Wednesday, we have another high probability distribution day, high probability bullish distribution day. We have another up close candle, right? So this week is looking like a classic buy week, where Monday, we initially drop down. We're forming the wick of that weekly candle. Tuesday forms the low of the week, also a part of that wick on the weekly candle, and then begins to distribute higher. Now, Wednesday, the following day, we can expect more continuation to the upside. And Thursday, we can expect more continuation to the upside. And we can also expect Thursday to form the high of the week. And then Friday, we could see a retracement back into the weekly range, a TGIF setup, right? So going into today, just using the weekly profile that we have present in this market conditions, we can have a bullish bias, right? We could draw to this high right here. That could be a potential target. I'm not sure if I had that annotated on my chart. I have to drop down to the lower time frame. So let's look at the 15-minute time frame, okay? So if we look how this weekly profile played out, why is this all the way over here? Should be over here. Right there. Perfect. And then we should have another line right here. So let me draw this out real quick. We can look at the weekly power of 3 on the 15-minute time frame, okay? So this is Monday's range, right? We drop down. We're building that wick on the weekly candle. Here's Monday's low. Tuesday takes Monday's low, begins to distribute higher. Notice how we work off the upper quadrant of that weekly buy side imbalance, sell side inefficiency. We begin to distribute higher. Wednesday, we open. We have a slight drop down. We have a smart money reversal off of that daily order block, which is the down close candle from Monday's range right here. See what it looks like on the daily time frame, and then drop down into the 15. You can see how it develops. Here we have Monday's range, right? It's a down close candle. Tuesday distributes higher. Wednesday drops down into the open price of that bullish order block and distributes higher off of that, right? Forms the low day in the London session, and then we have a London reversal profile where they have the low day formed in the London session, and we see distribution higher throughout the New York session, okay? So this week is clearly bullish, and what could we be reaching for? Well, we have that weekly high, that old weekly high from the higher time frame. If we go back out to the weekly time frame, it's this week's high, right? So key highs and lows, you want to mark your previous 3 weekly highs and lows and previous 3 daily highs and lows. So mark that on your chart. That's a key area of buy side liquidity. The algorithm knows that there's going to be buy side liquidity resting above that weekly high. Dropping back down to the 15-minute time frame, what do we see? Well, in today's session, I think the read on the market is fairly easy, especially after the 8:30 news driver. We had CPI data today, right? And news is always a smokescreen, which means it is used to hide the true intentions of what the market makers want to do with this thing. You can see that on the news driver on CPI, we dropped lower hard, and we took out a pool of sell side liquidity. We also traded down into a higher time frame imbalance. This is a smokescreen. This is a fake move to get everybody thinking that, oh, wow, this thing is weak. This thing is going lower, when really it's just aiming for a pool of sell side liquidity, trading into that higher time frame imbalance. And then 9:30, we see an initial Judas swing lower, smart money reversal. And then they are going to drag all the traders who got short off this thing across the coals, and they all get trapped short, right? So if we look at what they leave in behind after CPI, anytime we have a news driver, heavy hitter news driver that comes out, you want to see what do they leave behind? What does it leave in its wake? You want to look for the smooth edges in the marketplace. Look where it's jagged, right? So you can see at 8:30, the market trades lower. It runs the sell side liquidity below yesterday's PM session low, trades into the higher time frame imbalance. So it is getting jagged down here, right? The price action is getting jagged. We ran this low here. We formed a low here. We have a data low right here, and we ran that low as well. So it's getting very jagged down here. Took the stops under this low, took the stops under this low, took the stops under this low. Smart money reversal. But if you look above the marketplace, we can see that this high and this high, they are relatively equal. So we know that there's going to be buy side liquidity above those highs, and the algorithm is going to seek that liquidity above those highs because the damage is done down here. The stops are ran down here. So the market's going to move away from this area because the damage is already done. and it's going to seek to disturb an area of price action that is undisturbed, that is still smooth, where it knows stops are resting, which would be above these relative equal highs, right? So we can simply see that we have a high and a lower high to the right of it, relatively equal highs. But if we look below the marketplace, we can see that this low just boom does the damage underneath this low does the damage underneath this low, the damage is done, the stops are ran. So what is the market going to do? It's going to seek areas of price that are smooth after that, okay? So this is just me framing what I was thinking for the daily range, for today's daily range, and what was going to happen post 9:30. I'm just explaining the logic behind what I was thinking and how I framed a trade off of this logic. And if you look at what goes on in the overnight session, we can also see the start of a market maker buy model, right? Here we have original consolidation. We drop down, we take the sell side liquidity initially. We have this move higher, pumping this thing up into a premium before that news driver, and then boom, we drop again lower into this pool of sell side liquidity, right? So above the marketplace, again, smooth, below, jagged. And this hourly imbalance was a key point of interest for me because we had that sell side liquidity from yesterday's PM session resting inside of that imbalance. So that is why I marked this as a key point in the marketplace to anticipate a reversal, because we have a pool of liquidity paired with a higher time frame imbalance, right? And we can see how the bodies of the candles close on this imbalance. Notice how they close in the upper quadrant. The wicks do the damage. The wicks reach down into the lower quadrant, but look where the bodies close, right? That tells you the narrative. That tells you that price is strong. That tells you this thing wants to go higher. Seeing how the bodies close in the upper quadrant. If we see the bodies of the candles close in the upper quadrant of a bullish fair value gap or a buy side imbalance, sell side inefficiency, that indicates strength, okay? Beautiful, perfect. Now you have all these pieces of information coming together. And one more thing, check this out. We have a discount gap opening, meaning the difference between where we close, I'll go on 15-minute time frame for this. Let's see. The difference between where we settled yesterday at 4:15, which is this candle right here, and where we opened today at 9:30, see how we gapped down? So that is going to set your initial bias for the morning session. In that first half hour market open in the opening range, initially our bias is bullish because we have a gap down. We have a discount gap opening, and there's a 70% likelihood that the market is going to trade to the midpoint of that gap. The difference between where we closed yesterday at 4:15 and where we opened today at 9:30. So I dropped the fib on that. I found the midpoint, the halfway point. There's that price level there, and there's a 70% likelihood that the market's going to draw there in the first half hour of market open. So now we have all these factors coming together, right? This area price action is smooth. We have a discount gap opening. We have a higher time frame imbalance paired with yesterday's PM session sell side liquidity pool. Down here is getting jagged. Notice how the bodies of the 50-minute time frame are also closing in the upper quadrant of that higher time frame imbalance. So all these pieces are coming together. We know that news is a smokescreen. We know that news is used to hide the true intentions of what the market makers want to do with price. Okay, we're not fooled by this. We don't think that price is going lower after we see this. Okay, we think it's going higher. Why? Because if we look above the marketplace, it's smooth, right? And I'm getting really long into my explanation, so let's just break down the trade. All right, I'm gonna be real. The logic behind this is just very, very simple. Very, very simple. Okay. Now, let me explain the first part where I went right today. So usually at the 9:30 open, I feel anxiety. I like at the open, we usually see, that sudden rush of volatility, and that rush of volatility makes me feel like there's something going on. Like I have to be involved in the market right now. It makes me feel like I'm in a rush, like it's an emergency. It's an emergency for me to get in there and put something on because there's a lot of volatility in the marketplace, right? But today, I didn't feel that. Maybe because we had a lackluster opening, but still, I was calm and collected at the 9:30 open. I came into 9:30 open with the intention to, dude, calm down, okay? Just sit and wait. Wait for the macro, use the macro to give you some intel. Let the macro tell you what the algorithm wants to do, right? And that's exactly what I want. That's exactly what I did. So I had to remind myself, like, there is no rush at 9:30. There's absolutely no rush at 9:30. I don't have to get in there and put on a trade. And honestly, I saw the first presented for value gap right here, and I thought the market would trade back down into it and reach up into the consequent encroachment of that opening range gap. But then I thought to myself, that's such a stupid trade. Why would I do that? That's silly. Okay. I'm not doing that. I'm waiting for a high probability setup where I know that it is very likely that the market's going to do exactly what I anticipate it to do. Okay. And that comes at the 950 macro. Now, if you notice, we have an original consolidation right here, right? So this is a lower time frame market maker buy model that is aligned with the higher time frame market maker buy model. On that 15-minute time frame, we can see a market maker buy model. Well, here you have a lower time frame market maker buy model that is aligned with the higher time frame market maker buy model. Notice how we leave these relative equal highs, right? This is our original consolidation. And what do? Initially, we see protraction lower, taking the sell side liquidity below this low and this low. But if we look above the marketplace, it's still smooth. This high is lower than the one to the left. We have relatively equal highs. So we know that there's buy side liquidity resting above those highs. And what does the market do initially, slightly before the macro? Well, it drops down into this pool of sell side liquidity, takes this area of price action that was smooth, makes it jagged. So we know that the stops are ran underneath this low. And what is the algorithm going to do next? Well, it's going to seek the buy side liquidity above these smooth relative equal highs. Okay. That's the logic behind that trade. Very simple, very easy. And I know that the market is now seeking the buy side liquidity above those highs because during the macro, boom, it immediately turns on and it immediately starts spooling for that buy side liquidity above those relative equal highs. So if you study what macros do, if you study how price behaves during the macro, I'm telling you, it's going to open your eyes because it's going to tell you exactly what the algorithm wants to do every single time without fail. I'm telling you, it's a repeating phenomenon. Look in your charts, you will see it. That's why I have my macros annotated like this, because it's just repeating phenomenon. It's crazy. It's eye-opening, really eye-opening stuff, right? So we can see that we have original consolidation, protraction lower. This is the lower time frame market maker buy model. Initially, we take the sell side liquidity first. Okay, what's next? The buy side liquidity above what? These relative equal highs. Cool. And we have a discount gap opening, right? So we can aim for consequent encroachment at that opening range gap. That could have been a target for me, but since I've been dealing with greed a lot lately, I have to discipline myself to take off at low threshold objectives. I'm not holding for anything longer. Whoops, got a little too excited there. I'm not holding for anything beyond the lowest threshold of target because I'm going to face that greed. I'm going to conquer that greed. I'm not going to allow it to control the way that I behave and think, okay? Because there's been way too many times where I've set an initial target, moved my target beyond my initial target, and then that target never gets hit. My original one does, and then I stop out on the trade. Very frustrating, very demoralizing. I'm not going to let that happen again, right? So I'm aiming for the very lowest threshold objective. So I did think that today, I can move my target to consequent encroachment of the opening range gap. Then I was like, no, do you not know what we're doing? Bro, we're trying to fight greed. We're trying to get rid of this shit. You're not feeding it. So I was like, no, I'm aiming for the very lowest threshold, which was this high right here, right? Oh shit, let me log into my thingy. Need some water break. Awesome. Okay. So after price runs those relative equal lows, knowing that we have relative equal highs above the marketplace, and knowing that the algorithm is going to spool for that buy side liquidity during the macro. Why? Because this is a lower time frame market maker buy model. We have a smart money reversal during the macro. Look what we see. We see immediately we see displacement out of that pool of sell side liquidity. Okay. Look what happens when we tag this thing. We have a low, a high, a lower low, and a higher high. I'm just noticing this in hindsight. I didn't even see this. We have a breaker on the 15-second time frame. Look how price respects that. Boom, beautiful. So there you have your unicorn model, or whatever the fuck y'all call it. There we go. Unicorn model, right? High, low, lower low, higher high. There you go. Breaker, fair value gap. There's your entry. But I wasn't confident in getting my entry there because I needed more intel because we had this large protraction lower. I'm like, is the market really going to turn here? I need some more information. Although this was enough. I have to learn how to trust these moves, which will come with more screen time and more experience and more trades that I execute over time, right? But in this case, I wanted more intel. So what did I do? I noticed this large imbalance, so I annotated it, okay? The market trades down into it. I noticed we formed this swing low right here. So I'm grading this wick right here because we treat wicks as inefficiencies, right? If you find the midpoint of that wick, we can use that to grade the strength and weakness of the marketplace. If the bodies of the candles are respecting consequent encroachment of that discount wick, what does that indicate? Strength. So I'm seeing this as an indication of strength inside of that large imbalance during the macro after we run a pool of sell side liquidity. So it's just everything lining together. I have a model 2022 entry right here, right? We have a market structure shift. We take out this short-term high. and we have an imbalance here and an imbalance here. You want to get your entry in the first imbalance, but your stop loss has to tolerate a move down into the second, because it could trade down into the second, but you don't want to miss your fill if it never does. Okay. So I got my entry there, stop loss below this candle's low, and I was targeting the very low threshold right here. So I took off right there, and I got my entry right here, one tick above this candle's low, just to make sure you get filled, because sometimes you won't get the spread. And we can see that we delivered to that higher time frame buy side liquidity. So we completed that higher time frame market maker buy model, right? And there you go. That was the trade for today. That was all the logic. So I was able to combat greed. I was able to remain calm and collected at the 9:30 open. I was able to execute upon my setup after I demanded more intel, because initially I wasn't trusting of the move until I used that discount wick to get more intel inside of that imbalance. So I mean, I did everything right, and it was just fucking beautiful. Okay. And that's all I got for today. See ya.